Hello, everybody. My guest today is Spencer Bogart. It's going to be everything crypto. He's a managing director and the head of research for Blockchain Capital, the premier venture firm investing directly into blockchain companies. Prior to joining Blockchain Capital, Spencer was a VP of equity research where he covered traditional software and internet stocks. He wrote Wall Street's first industry report on blockchain technology and was the most active analyst covering Bitcoin. Spencer, are you ready to take us to the top?
Yeah, absolutely.
Good. Well, thanks for joining us. I appreciate it. So, listen, I'm just going to dive right in here. I first want your opinion on Grayscale. So, one of the things, and their Bitcoin, what they're building, right? So, a lot of people that I've had on, whether it's Anthony DeLorio from Ethereum or Christoph, who had the DAO issue and all this stuff, they all say that the big value of crypto is the decentralization. And so one of the things we've heard about, and my listeners have heard about a lot, is Target hacked for 10 million credit card accounts hacked, etc. Because hackers know all that credit card data is in one spot, it creates a target. Well, Grayscale, I imagine, by setting up this kind of Bitcoin investment vehicle, they've created essentially a target, I believe. Is that a real threat? And what are your thoughts generally on whether it's an ETF model or what Grayscale is doing? What is your thought on kind of this kind of crypto hedge fund?
Yeah, so you're right. It has created a honeypot, right? And so, important in this context is actually that the honeypot is actually bigger on the exchanges. So, Coinbase, Kraken, Poloniex probably being one of the bigger risks out there. These are giant honeypots of Bitcoins. And the problem is once they're gone, they're gone. There's no getting them back, right? But overall, if I circle back to, GBTC, the Bitcoin Investment Trust, I mean, the reality is that this is the best way,
right?
Yeah, that's Grayscale's product. Yeah, exactly. So, the reality is that this is the best product that exists today. It's not a perfect product, but it's the best that exists today. And the only way to get exposure to an exotic asset that is Bitcoin in a traditional security wrapper, right?
So for one of my listener, I mean, obviously this, I don't know that this is necessarily open, but currently I'm just reading the data off the site. They've got about $437 million in assets under management, about 1.8 million shares outstanding, and Bitcoin per share is go close to 0.1. If someone listening right now, I mean, can any of them get exposure to Bitcoin going through this if they're illiterate and on the technical ways that Bitcoin actually works or crypto works?
Yeah, absolutely. So, a lot of the companies make it pretty easy to be able to acquire Bitcoin. So, Coinbase being one of my favorite, Kraken being another. The user interface is pretty simple. It just looks like a regular standard kind of email address and password, and then just with a little bit more kind of two-factor authentication and stuff to keep your Bitcoin secure. But you don't have to be really technically savvy to be able to go ahead and acquire those. As you extract your Bitcoin, so when you buy it on Coinbase, you can move it to your personal wallet so that it's outside of kind of that honeypot and only you control it. As you go down that road, it requires a little bit more technical expertise, but honestly, there are a lot of products out there that make it pretty simple today.
You famously predicted many, many months ago, I think late last year or early this year, that there was a sub 25% chance of the U.S. Securities and Exchange Commission approving a Bitcoin ETF. First off, do you still believe it's sub 25%? And if so, why that prediction?
Very good question. So, it's really around the nature of the underlying markets of Bitcoin, right? So it's very difficult for regulators to get comfortable with it. Not that they shouldn't be able to get comfortable with it, but that it's difficult, and I acknowledge that. And overall, from a decision maker standpoint, if you're at the SEC, this is one of those things where if you approve this particular ETF and it goes really well, nobody comes back and kind of, gives you a big promotion, right? But if you do approve it and something goes wrong, maybe $1 billion worth of assets flows into this type of a fund, and some sort of a hack or something like that happens, you might lose your career. So it's just kind of this asymmetric downside risk from a regulator's standpoint of approving such an ETF. That said, that's kind of been my historical perspective. I still largely think that's the case. There has been a change in administration at the SEC that could be a little bit more favorable to kind of working with cryptocurrencies in general.
Okay, so do you still believe it's sub 25% that actually happens because of the asymmetrical downside risk?
I think it's still quite low. I mean, the SEC has made a pretty definitive decision about this, that the underlying markets for Bitcoin are too unregulated, and therefore they're not going to allow a regulated product. So it's kind of a circular argument in that it's too unregulated, so we won't regulate it. But it is as it is. But the interesting thing here is also that the Winklevoss brothers, kind of Facebook fame, are the entity kind of that were pushing that big ETF that was disapproved in March. After it was disapproved, they submitted an appeal to the SEC to reconsider the decision. Surprisingly, I don't know what was in that appeal. It's not a public record. I didn't expect the SEC to grant that appeal, but they have. And so they are reviewing the decision. It's possible that we get a reversal and the ETF is approved. Again, I'd pin those odds pretty low for the same reasons as before. And nothing has changed in the underlying markets.
How much does that, the mere news that they're reconsidering that, drive up the value of crypto?
It didn't seem to have much of an effect. It felt like we had a huge buildup as the original kind of approval decision came to a head, and the SEC waited till the last day to make a decision after about 3 years of reviewing this particular filing. It felt like the price was kind of ramping up in anticipation of a potential approval. In which case, if it were approved, you would have had kind of a flood of assets coming in and potentially pushing up the price. And so you had speculators kind of moving in beforehand. Still, that said, when it was disapproved, we saw this quick spike down in price. I mean, literally a spike down for maybe 30 seconds or so. And then price was just right back to where it was before. So far it seemed pretty resilient, and it doesn't seem like there's a lot of speculative activity kind of just around this decision.
Okay, I would just want to fire. Obviously, those were very random questions, but I was very curious your thoughts on them. Let's focus to blockchain capital now. What's it do?
Sure.
I mean, should we think about it like a VC firm focused on blockchain?
That's exactly it. Yeah. So, I mean, we're the premier venture firm. We've been investing in the space since, 4 or 5 years now. And so, it's been great. We're now raising our fourth fund.
What was the last one?
The last fund we did as our own ICO. So I don't know if you've been following this ICO phenomenon, but we raised the world's very first venture fund via an ICO. So we limited the size. We capped it at just a small $10 million offering to make sure that, we can mitigate risk there and make sure that it's successful. That offering, that $10 million sold out in 30 minutes when we went live with the sale.
What day was that, or what month?
That was on, I believe it was April 10th.
Last year?
I believe. Of this year.
Oh, this year, April 2017.
Mm-hmm.
And had you raised traditional capital from LPs before that ICO?
Yep. So that was our third fund. So, we did 2 traditional funds before that, and now we're raising our fourth fund, which will be, at least an order of magnitude larger than Fund 3.
From LPs, you're going to ICO or do a token issuance?
Oh, no, this one's from traditional LPs. There's a lot of institutional appetite to move into the space now. Yep. So, this industry has changed substantially. A few years ago, we had the first major boom. There was a lot of investment activity. Most of those bets didn't seem to be paying off for a long time. And only in the past kind of 8 months have a lot of them started to bear, really big, juicy fruit. We have a couple of unicorns kind of lurking in the background that haven't officially done a raise yet, but I think we're going to start to see this moving forward. And the institutional investors that are out there are aware of this, and they are saying that now is the time to deploy capital. And so, we're just all hands on deck, and, people are beating down our door to come and get some exposure to the industry. So
guys, coming up, I'm going to ask more questions for Spencer around obviously the crypto space, specifically some of the investments he's made or they've made, like in Coinbase, and then additionally more of his thoughts on kind of the ICO network in general, the ICO concept in general, and where they headed, specific with an example that recently they got behind, which was Civic, which is an interesting story. Spencer, first though, give me the fund size real quick. So fund 1 was what size, and fund 2 was what size?
Oh, geez, I'd have to go back. Fund 1 was like around a $3 or $5 million fund. That was in the very early days when there was no investment activity in the space. Fund 2 was $15 million. That would have been, I think it closed in like around mid 2014.
Okay, the 1 and 2 was 2015.
2 was 2015, and then exactly. And so we've been deploying the funds from both of those, and then we did Fund 3 earlier this year, which is just a really small one. And we're moving the capital pretty quickly there. Our deal pipeline is just
Fund 4. What's your target?
It's almost certainly going to be an oversubscribed $250 million fund.
Yeah, that's where you say the you undersell, and so the big press article comes out that you beat your 250 by 50 million to raise 300 million, right?
But we're not going to do that. We're hard capping at 250. That's the amount that we think the space can really handle right now, and we just don't want to go above that. We think we'd start to dilute our returns if we did that.
Okay, let's talk Civic, right? I want to actually understand how you're taking kind of LP dollars and funneling them into kind of crypto assets. So how did the Civic deal work?
Yeah, so the Civic deal was really well organized. So actually, in this particular case, we're actually equity holders, or we held a convertible note previously with the company. And then also have now invested into their token sale. So, in this particular case, Vinny Lingham is a noted entrepreneur in the space, and he raised, I think it was $33 million in total. and did it through a process that was one of the most well organized that we've seen. It was very much like standing in line for like a Burning Man ticket or for an oversold concert or something in that respect. And that not everybody could get a piece, but it made the best effort to at a broad distribution.
Describe, just so people have context, describe what Civic is, like what the business is.
Yep. Yeah. So Civic is an identity on the blockchain type application. So it's the idea is that this company does not take any of your identity information, but it allows you to provide it to others. So it's only stored kind of locally on your device on the edge. It uses authentication on the blockchain so that people can verify that you are who you say you are, and that matches your fingerprint without turning over that identity information to a third-party provider like a Facebook or somebody.
You mentioned you had a note early on in Civic. How much capital did they raise, traditional capital did they raise before they decided to do the token issuance?
Ooh, I'd have to go back and check to see exactly what that note was, and I can't remember if it's a public record. But the token offering was significantly larger.
Okay, the reason I want to know that amount is I want to understand the relationship between traditionally raised capital and what happens when you then do a token issuance after the fact. It seems like that adds complexity. How do you guys look at that capital? The early capital.
That's exactly right. So, this is one of the most interesting ongoing discussions that we have kind of internally, is how do we handle this situation where we've already invested in the equity of companies, now there's a token sale, right? So that's an evolving science, and we're trying to figure out exactly how to handle those situations. I wish I had a perfect answer for you right now, but it is an evolving science.
Well, I mean, so I'm going to make a hypothetical to just try and drive this down more. Let's say the company sells today. I'm making this up. Let's say BB&T buys them for $200 million, right? I mean, the people that bought tokens and they issued basically 1 billion tokens, only sold 33% of them. Is that dilutive to your capital you've already put in, or no?
The tokens are not, no.
Okay, so the only people actually on the cap table is traditional capital already in, and then whatever they kept for founders and whatever the equity pool is for employees, just like a typical startup, right?
That's exactly it, yeah.
Okay. Okay, so I understand that completely. This distribution would just happen, whatever the waterfall is. How would people that bought in on the token issuance analyze that if they sold to BB&T? What would happen?
Well, in that particular case, so they might not benefit directly from that particular transaction, so from the acquisition of the company, but what they are going to be benefiting for is that ideally in that kind of a favorable acquisition scenario is that it's an indication that there's a lot of demand for the underlying technology, in which case, the tokens of Civic are fundamentally tied to demand to use their service, right? So in that particular situation of a favorable acquisition, presumably demand is surging, in which case, the tokens should be reacting favorably as well, even if they aren't getting literally paid out or anything by an acquisition.
Yep. So I want to read this from it was well, not the whole thing, but it was the Routers report when Vinny went on and kind of released the crowdfunding. So 1 billion tokens were created by Civic, 33% were offered in the public sale, and then 33% were given away to companies and users to accelerate growth, or it will be given away to do that, and then another 33% will remain in the company's inventory and be available for sale only after 3 years. Right. I understand the first part, which is they sold 33% in the token sale.
Yep.
So let's skip to the second. 33% will be given away to companies and users to accelerate network growth. Can we look at this and basically say that's the equivalent of the $10 million Stripe fund or the Slack investment fund to fuel their ecosystems?
I would say it's very, very similar. Yes, absolutely. It helps you solve kind of a chicken and egg problem, right? Of if I'm Civic and, one of the main things they would like to have is, a login with Civic button everywhere that, doesn't give away as much of your personal information as like a login with Facebook type button. But how do you incentivize a bunch of people, a bunch of websites and login services to have that button before you have a huge user base? And how do you have a big user base until you can log into all these? So you have this chicken and egg problem. And tokens are one way to help solve that. I mean, I know in particular for, a couple of websites that we run, we'll definitely have a Civic login. And that's because we want some of those Civic tokens. And so Civic will reward some of the people in the ecosystem that, integrate their service with tokens directly.
Okay. That's not mining though, right? The concept of mining is not that. No.
You know what? It's not, but in this context, I mean, you can think of it. It is a direct parallel. That's okay. You're thinking about it the right way.
Okay, good. Last part, and the remaining 33% will remain in the company's inventory and will be available for sale only after 3 years. Why do they do that?
Well, because you have to think about it, just like if you're doing venture rounds, like you don't raise all of your money, right away. You start with seed, you start with Series A. I mean, the idea is that Civic wanted to sell enough tokens and get that distribution very broad to create this initial user base to kind of again solve that chicken and egg problem and kind of grow their network effect. But down the line, they think these tokens are going to be worth more than they are today, right? I mean, that's the reason why companies holding on the balance sheet and why they've reserved some for a future sale. So just like a company doesn't sell all of its equity up front in its first round, in this case, this is certainly not equity in any regards. But also, if you think that it's going to be worth more in the future, then you'd prefer to wait and sell some of it at a future point in time.
Interesting. So, Vinny, you, other investors could be thinking about that in terms of, hey, if this does grow in value over time, we still have 33% left to raise additional capital from. But guess what? If we want to raise another 33 million, maybe we only have to sell like 3% of the company of the 33% that's left versus another 33% total.
That's exactly it.
Interesting.
Right.
Okay, that's fascinating. So, how do you mentioned you were part of kind of the traditional capital they raised before the token issuance. You then said you participated in the token issuance. How did you use, I'm making this up, how did you use $1 million of LP raised money from your fund, and how did you put that and translate that into amount of tokens in Civic, or CBC, I think is what they're going to issue?
Yeah, so I mean, I would have to go back and see exactly what all of our investment amounts time up to, and exactly how we handle that convertible note.
Sorry,
so
just
all these things
not
are
the
kind of
actual
in flux
numbers,
right now.
but just the relationship. Like, I'm trying to understand. That's a hypothetical.
Yeah.
Just how does it actually work?
I mean, they're just two completely different decisions. So we made the equity decision completely at one point in time, and then the tokens at another point in time. And
how
so,
do you do it though? What I'm trying to understand, Spencer, is how do you, when you decide you want to take part in a token issuance as an investor, like how what you mentioned it's like a line for Burning Man, but how does it actually work?
So I mean, each of these kind of token offerings is going with slightly different models. I think the Civic one has been the best run to date. In particular, you had to use kind of their identity application in order to stand in line. When that token sale opened, you said that I want to participate. And you got some placeholder in line. You might have been towards the front, you might have been towards the back, and that offering, to prevent kind of the FOMO that we've seen in some of these offerings, just kind of went on a rolling basis. First person in line gets the option to purchase a package of up to a maximum size, and then once all the packages of a maximum size are sold out, you start to kind of scale people back so that if you're towards the back of the line, you either might not have gotten a chance to participate, or if you did, at a much lower amount than people at the front. But such is the nature of something that's in limited supply with outsized demand.
Are you actually putting up like United States dollars to buy an equivalent amount of like Ether or CVC, whatever the ratios they're using?
Yeah, I mean, in this case, we actually contributed with Bitcoin, I believe, in this particular sale. Sometimes it's with cryptocurrency and sometimes it's with USD. But I mean, hey, crypto is about as good as USD these days, considering how easy it is to kind of exchange back and forth between the two. So
okay. Let me ask the next question. So we have many entrepreneurs that listen to the show, VCs, private equity people. For a startup CEO looking to do this and wondering the question, well, how does Civic pay like early employees, and how does Vinny pay himself a salary, etc., if this is all in crypto? I got the answer to that, I believe, when I interviewed the Joe, the founder of First Blood, that did a token issuance on the Ethereum blockchain back in September. Capped it at $5 million. He then immediately liquidated 80% of it at an $11 kind of price point. That was what Ethereum was at the point. So they put basically $4 million in their BB&T account. I can't wrap my mind around how that just feels like a lottery ticket. Like, how do you manage to pull, like, the equivalent I see is like when I raised venture capital in my last company would basically be like me saying, I'm gonna raise $10 million, but I'm actually selling a bunch of my equity and I'm gonna cash out $9 million of it, right? So like, that's not a good sign of confidence to the business. How do people manage what they pull out to actually run the business versus what they keep in?
Yeah, absolutely. So I mean, most of these, taking the funds that they raised and largely converting it into kind of a fiat currency, US dollar, euros, or something like that, because they have to pay their bills, right? Some of them are being a little bit more speculative of, okay, we're going to hold some of the funds that we raised and keep it in cryptocurrency. That can play favorably. Like in the First Blood example, when they sold at $11, and I mean today, Ethereum trades at about $180. So left a lot of money on that table, but it could have gone the other way as well. It could have gone down to $1, right? So I think most of the more prudent teams are doing a pretty significant conversion up front, and maybe leaving a little bit on the table as well. What are you seeing on average?
You have a unique perspective. You have a very unique perspective. Are most people liquidating 50%, 80%, 10%? What are you seeing?
I'd say most of them are liquidating upwards of 80%, but some of them like to roll the dice a little bit more. The teams that we're working with, it's that's not the reason why investors invested in your token sale was for you to speculate on the price of Bitcoin or Ether. Do yourself a favor, convert to a currency that you can actually pay your bills in and pay your developers in. And yes, you might leave some upside on the table, and you might also avoid downside. So just mitigate the risk. That's not why people came in and participated in your token sale, was for you to speculate on those cryptocurrencies. So
yeah, but that cash is what allows you to then go. That cash is then what allows you to actually go build the utility value of the identity network.
Mm-hmm. Exactly.
Yeah. Okay, last set of questions here, and it's around Coinbase particularly. So founded in 2012, I think they've raised, over $100 million. Many would say, would you say the number one exchange?
Yeah, they're certainly the biggest brand in the space, right? They're kind of like the blue chip company. Yeah, that's kind of the way that they're thought of within the space. Certainly they're thought leaders and definitely forerunners in the exchange. There's a lot of different ways to rank this. By a valuation basis, they're probably, the most valuable or one of the most valuable.
Mm-hmm. One of the questions listeners are always wondering when I have crypto guests on is they go, Nathan, if I make money in crypto or I'm mining or something, and then I need to pay for my restaurant bill tonight and it's $100, how do I actually make that happen from my crypto assets? And the answer is something like Coinbase, right? Some exchange, which they make money based off of a fee. Now, if the US government and governments around the world start normalizing, right, the use of Bitcoin or crypto so that restaurants actually accept crypto, etc., the need to actually use an exchange decreases drastically. Right, which potentially really negatively impacts Coinbase's model. So what's interesting here, and I want your perspective on, there is a perverse incentive structure where Coinbase is actually incentivized to not see widespread government adoption of crypto because they need people to be putting money through their system to exchange it to make money. Is that accurate? And if so, if the government does approve this kind of thing, does Coinbase go out of business?
It's a reasonable question. I think that if Coinbase had that problem, this would be a very high-class problem for them to have. In reality, merchant processing is an insignificant portion of their business, right? So this ability to, Coinbase a lot of times will do that directly for a merchant, right? So, somebody's paying you in Bitcoin. Expedia.com. Somebody has tried to pay with Bitcoin. Most of the time what those services are doing, whether it's Dell or Expedia, Microsoft, or any of the other websites that either do or have historically accepted Bitcoin, they're converting it immediately. So they're using a service provider like Coinbase or BitPay to convert that to fiat currency immediately. That is not as big of it's not as meaningful of a business as just the exchange business overall. And so in that situation that you described where, this becomes very widespread adoption and people are just paying directly, what you described there, by the way, is a circular economy, right? So when I pay with Bitcoin, the company actually takes in Bitcoin and doesn't try to convert it. And so, to the extent that we get to a circular economy, there's a lot of capital that needs to flow through these on-ramps that are Coinbase and Kraken and these other major exchanges. And so, again, I really don't think they'll be hurting. Well, it needs to. Yeah, exactly. So, some people, you're right, they just mine cryptocurrency, but that's a small portion of it overall, right? A lot of the capital comes in from converting US dollars or euros. So, I think that in that particular situation, Coinbase is going to be in a very, very good position.
Okay, last question before we wrap up with the famous five. Pick a baby. What investment are you most excited about?
Oh, that's a very good question. It's hard to not have Coinbase as a favorite at the moment. They're leading the pack. They're probably the most valuable company in our portfolio today. That said, we'll have to wait and see. Conservatively, we're estimating that there's probably 4 unicorns in our portfolio today. So they are, I guess I'd have to pick them.
All right, let's wrap up here, Spencer, with the famous five. Number 1, what's your favorite business book?
My favorite business book? Oh, that's a very good question. Peter Thiel's is a good one.
0 to 1?
Yep.
Number 2, is there a CEO you're following or studying currently?
Ooh, historically one of the ones who is not as active anymore, but one of the CEOs that I was a big fan of was actually CEO of 21 Inc., Balaji Srinivasan. Of Andreessen Horowitz. He's gone quiet because he was up for a major kind of government appointment. I haven't heard a word on that, but it's kind of made him a lot more quiet on social media, et cetera.
Number 3, what's your favorite online tool, like HostGator?
My favorite online tool, I guess right now in the crypto community, it's got to be Telegram. That's where we're all kind of connecting.
Got it. And that's like, can we think about that like a big forum? It's where all the crypto headies hang out.
It's very much like a Slack.
Okay, got it. All right, number 4. How many hours of sleep do you get every night?
Lately, probably only 5 to 6, but typically more like 6 to 7.
And what's your situation? Married, single, you have kids?
Married, no
No
kids.
kiddos? All right, and how old are you,
Nope.
Spencer?
Just under 30.
All right. I like how you say that. Last question. Take us back 9 or 10 years. What do you wish your 20-year-old self knew?
Oh, I just wish I was spending more time on Bitcoin. There was a lot of people that were very close proximity to me geographic wise that were doing really interesting work in the early days. And I just really, I'm relatively early compared to most people, but there was, a lot of people that were very, very early to the space. It was a fascinating time to be part of it in these very early days. And if I could go back, I just wish I would have been there.
There you guys have it from Spencer, thought leader in crypto, now at Blockchain Capital. Their first fund was in 2014, about 3 to 5 million. A second fund about in 2015, about 15 million. Then their third fund sold out in 30 minutes. It was an ICO or token issuance back in April 2017 of 10 million bucks. Now doing the fourth fund at 250 million bucks, investing in companies like Argo, like Civic, like Coinbase. He's most bullish on Coinbase in terms of value, but again, also super helpful in understanding how they got involved in Civic, both from a traditional kind of note perspective, but also in their token issuance. Spencer, thank you so much for taking us to the top.
Thank you so much for having me.